Hey everybody, Chuck Barone here. Thursday, September the 1st, 2022. New month, same old crazy, guys. Wow, it just seems like we're living in a friggin' soap opera here, and every day brings some new crazy drama. A lot of stuff to talk about today, guys. Before I do, as always, though, I want to thank everybody for their support for the channel, for watching the videos, for all your likes and comments and questions and shares and everything you guys do every day to help us. We really, really, really appreciate you guys. In the market today, well, it was a kind of a weird day. The stock market ending up mixed. It was looking pretty bleak early. All the indexes were down in the futures before the market opened. The market opened lower, started tanking down, but toward the end of the day, a glimmer of light, the market rallies with both the Dow and the S&P ending up in the green, breaking a 4 or 5 day losing streak. The NASDAQ was down today, but down small. The market, it doesn't like where we're going with these rates. And, this bounce was nice. It's a good selling opportunity for some people that are in some higher risk stuff right now. Get yourself in a defensive position, guys, because these rate bumps are just the beginning. The Fed's going to continue to raise rates on this inflation fight. Powell has made it very clear that there's going to be some pain, and by pain he means friggin' recession, okay? So let's prepare, guys. Let's really now take this stuff serious, because it's now getting really close to sitting in our lap. In the bond market today, the bond market was the catalyst for such a crazy, crappy day and everything. The 2-year rate just flying. Today closing above 3.51%. This interest rate on the 2-year now is more than double the dividend yield for the S&P 500. Great! So now people are going to start moving into these 2 years. The 10-year, which is the widely watched one, and everybody's the one keeping an eye on, was up 13 basis points today, settling at 3.26%. The market's just hating these rates, guys, and so is everything else. I mean, it's just these rates going up. The dollar today, from the strength of these rates going up, the bond market tanking, the dollar hitting a 20-year high on the index, 109.67. The dollar's just strengthening, putting big pressure on metals. Gold and silver down today. Gold settling at $16.96 per ounce, breaking under 1,700 support. Silver, $17.86, really cratering from the 19 I was hoping it would hold. Now it's going to be very, very difficult for metals to have any kind of rally with the dollar going bananas like it is. I mean, I remember when 2007, 2008 were rolling around, the big kablooey was on our lap. The dollar index was barely holding 80 on the dollar index. So to see it at 109 right now is it's amazing. Great time to have a European vacation and if you have any extra dollars laying around. But anyway, metals down, gold, silver, platinum, everything down across the board metals wise. Oil also down today, settling at $86.26 per barrel for West Texas Intermediate. Natural gas, of course, up still, $9.18 per their million British thermal units. Natural gas is going to stay elevated. I think oil has got some pressure now. OPEC actually starting to cut their production. It's still not having much benefit on the world markets as far as raising oil prices. Maybe this, election year miracle with oil is going to happen. It looks like it's on its way down. A little bit of relief at the gas pump is going to be welcome, guys. Bitcoin also today down, just settling just under 20,000 last time I looked at it. Bitcoin, hopefully it can get itself above 20,000 and get some strength there, build some consolidation. But I think it's more likely it'll get down and test the recent lows at 18,500. And hopefully we'll see if it stays, if that support line holds and if we can get a bounce from it, or if now Bitcoin's just in for another down cycle. Big economic data coming out today that was what moved this market like it did. New jobless claims fell. They're at a 9-week low at 233,000. Layoffs are very, very low right now. The labor market, if we can believe these numbers, is very, very tight right now. A lot of openings, a lot of people looking for employees. I don't know how many of these jobs are like really good paying jobs, but there are jobs out there for people who want them. And apparently people are taking the job rather than the unemployment benefits. So this is putting additional pressure on the Federal Reserve to raise rates even higher. Now we'll see, because tomorrow is a very big day. Tomorrow we will get the data from the government on, job creation in August. They're expecting 300,000 jobs in August. We already know ADP came out and said there was only 132,000. So that number now looming pretty big as far as where is the Federal Reserve going to go with these rate hikes. I think if the numbers come in closer to that 300,000 number, that's going to signal that all clear for the Fed to maybe bump in September, well, in this month now, another 3/4 of a point bump, which would bring the Fed funds rate over 3%. That's an overnight rate, so you got an idea of what it'll do with the 2-year, the 5-year, and the 10-year rates. And if the number comes in lower, well, that'll give the Fed a little bit of breathing room, depending on how the rest of the data comes in, to maybe limit the rate increase this month to 0.5 point. The other economic news today, manufacturing numbers coming in, the PMI index, very strong number, 52.8 on the index. Anything above 50 signals growth in manufacturing, so 52.8 is a good growth number. It's not like, holy crap, manufacturing's booming, but it's holding its own. They're hiring. There's growth in manufacturing, and that was a big catalyst that strengthened the dollar today, bringing it to its 20-year high and put big pressure on everything else. The markets, we're just getting so much conflicting data. The markets are saying, we're hearing people interviewed, CEOs of big companies, over 50% of the companies, and I've reported it on this show, talking about either are already or are contemplating very soon laying people off. It is not reflected anywhere in these unemployment numbers. So you guys let me know in the comments section today if people are being laid off in your area. Are people where you work losing their jobs? What's happening? Are there people looking for jobs that can't find them, or are there a lot of openings that can't be filled? It would be interesting to hear, because we have people all around the world watching this show. Here in Vegas, employment's real strong. The casinos on the Strip are booming. They're hiring like crazy. So unemployment in Vegas, while still higher than the national average, has been coming down pretty steadily. There's a lot of new projects coming up in Vegas. We'll see how this all ends up heading into this storm we're heading into, because, guys, this recession's real. It is not going to be pretty. And actually, the next thing I want to read here, now this is going to be a little different, because ordinarily you guys would get treated to Chuck Barone market commentary, and that's not always your favorite. But this is going to be different. I want to read a couple of excerpts out of this article I was reading this morning. Most of you guys are familiar with Michael Burry. Now this guy, you may not be familiar with his name, but this is the guy that was depicted in the 2015 film, and I think the book was 2014, Michael Lewis's book, The Big Short. This is the guy, along with, I know of Peter Schiff, who were calling for the subprime meltdown, for real estate to crash. This guy put his money where his mouth is and just made Brazilians of dollars doing it. And he's been a very accurate predictor of what's happening in the markets ever since. Now, he came out recently with a couple of things that I think you guys need to hear to give you a sense of where we are really at, because I don't believe this guy has any axe to grind. He's not going to be supporting one side or the other. He's going to tell it kind of like I do as he sees it. And this is some really fascinating stuff, so indulge me while I give you guys some additional information about what he's been saying. Michael Burry rose to fame after the 2015 film The Big Short depicted his bet on the subprime mortgage meltdown, which sparked the 2008 financial crisis. The financier has since become a market statesman. The name of his profile, blah, blah, blah. He's been delivering, he's the bearer of bad news, and he's been delivering it for the past few months. This investor, who recently liquidated his entire portfolio of U.S. stocks, save one, says the worst for the economy is yet to come, as Federal Reserve Chairman Jerome Powell reiterated on August 26th that the central bank would continue to raise interest rates aggressively to fight inflation. Powell warned us that there was going to be some pain ahead. Burry goes on to say this monetary tightening will lead to a hard landing for the economy, in other words, a recession. Some experts and people listening to us and Greg and a lot of other people have been saying. Burry did not wait to start pointing out potential red flags for the economy, like the household debt crisis that pose a serious danger. And we've been talking about that household debt crisis as well. Burry goes on to say, net consumer credit balances are rising at record rates as consumers choose violence rather than cut back on spending in the face of inflation, the legendary investor posted on Twitter August the 12th. He included a graph from Bloomberg showing the U.S. consumer borrowing increased $40.2 billion in June from just the prior month. This was the second biggest increase ever, according to data from the Federal Reserve. Barone, quote, remember the savings glut problem? No more. COVID helicopter cash, great line, taught people to spend again, and it's addictive. Winter coming. Now, they're going on to say winter coming seems to refer to the HBO series Game of Thrones, where characters use that phrase, winter coming, as a warning. Nearly 3 weeks later, the financier did it again with a very gloomy prediction for the markets. Indeed, he seems to say that a stock market collapse is a matter of when, not whether. And yet I keep getting asked, when is the crash? Burry tweeted on August 31st with a Bloomberg chart showing the movements of the S&P 500 since 2017. On the graph, he highlighted the fact that the stock market benchmark has fallen 18% since its high in December. And it shows the chart here, and we all know that the S&P has been correcting. Even though it's had a bounce, it's now heading back down toward its low. Anyway, going on. Burry seems to feel that a stock market crash is shortly going to happen. In May, the investor predicted that the S&P 500 would fall to 1,862 points over the following few years based on crashes of past years. At last check, the index was around 3,908. From there, his call would mean a drop of 52%. Well, he says, paradigm shift, speculative peaks, the S&P bottomed 13% lower than 2002's bottom in 2009, 17% lower than 98's crisis low in 2002, 10% lower. So he's showing how these bottoms keep moving more from the tops, okay? The cause of his pessimism is that the greatest speculative bubble of all time in all things has been created since summer 2021. That's particularly because small investors went heavily into the meme stocks and cryptocurrencies, pretending the mother of all crashes. The financier has been right so far. The cryptocurrency market has lost more than $2 trillion since it peaked last November, according to data firm CoinGecko. Bitcoin, the largest digital currency by market value, has lost more than 71% of its value since the November record. The S&P 500 and NASDAQ, by contrast, have lost 18 and 25% respectively since January. Guys, this guy has been uncannily accurate in his predictions. If he's even remotely close on what he's saying is going to happen, Now, we're already seeing a 71% collapse in Bitcoin. Cryptocurrencies being wiped out by more than 2/3 of their values. Why would anyone not believe that a 50% correction in the S&P 500 is possible? You know, Powell's warning us of pain for the consumer and the economy. We can look at the history of inflation in the 70s and into the 80s and see what they actually had to do to bring it down and get it under control. Now, remember what I've been saying, and I'm going to say this again, guys. The Fed raising interest rates does nothing to bring inflation down. The Fed raises interest rates to bring on a recession, either a small or a large recession, to blow up demand. When that blow up in demand and that recession then brings prices down. Not the actual raising of interest rates. It's the recession that the raising of those interest rates causes that actually brings prices down. In 1982, when they finally got rid of that persistent inflation that lasted for more than 10 years, guys, okay? Volcker had to raise the overnight rate to 20. Mortgages were at 15. You could get 14% on a money market account, okay? So you could double your money every 5 years just by simply leaving it in a money market account, guys. That's what history tells us it takes to get inflation with the numbers we're seeing today down. A big recession. In 82, unemployment was over 10%. Interest rates to the moon to crush, literally stamp out the desire to borrow money. Now that's going to be quite a paradigm shift for this economy where borrowing money is what the whole thing is based on. It's going to be interesting to see how it all plays out. We'll be keeping you guys posted day to day. I'm glad. I appreciate you guys indulging me on this Burry article. I just thought it was something you guys needed to hear. This article is up on The Street. You can find it pretty easily if you Google it, I'm sure, to read the entire article. Fascinating stuff. A lot more information that I didn't go into. But just know, guys, bad stuff is coming. And we're going to know more just starting tomorrow on where things are going when the rest of this data comes out, especially the job numbers for August. That's all. I wanted to close today with something that I thought was humorous, even though it's kind of a sad story. But the markets and everything have been so bad and so bleak recently. I wanted to give you guys something that might give you just a little bit of a grin today. I was reading an article that the chairman of Lukoil, which is the largest oil company in Russia, this chairman made a big boo-boo and criticized Putin for the war in the Ukraine. Well, I was reading today that he died. He fell to his death from his hospital window. So the guy was sick in the hospital. Putin had it in for this guy, and lo and behold, he just happened to fall out of the window in his hospital. I didn't even know windows in hospital rooms opened. Okay, I guess it might be different in Moscow. But anyway, I just thought that how many of you guys believe A, this guy fell, or B, this guy was caused to fall? I'm firmly in the B category, guys, and hopefully you won't hear about me falling out of a window soon for saying that. Anyway, that's all I got for today. Make sure to tune in tomorrow. It's going to be a very important day with those jobs numbers, and we're going to speculate a little bit about what those job numbers mean and where things are going for the economy. As always, we appreciate your support. Don't forget to ask your questions in the comment section. If it's an in-depth question, something a little more detailed, ask Chuck Barone at gmail.com. Have a great day, guys. Until we talk again tomorrow, take care. Thanks.